Welcome back. You're still tuned into Power Breakfast. Let's now talk about all of the cues that you should track before we get into this market open. We have Ekta, Nigel, as well as Vivek joining us to take us through the trade setup. Guys, a very good morning to all of you. Ekta, coming to you first. We ended with some cuts yesterday, but take us through everything we should watch this morning. The global setup also looks a bit weak.
Thanks for that. Well, yes, you did mention the global setup quite, in a very distinct manner. So we did have the US markets which closed lower as Moody's downgraded several regional banks overnight. We have Asia, which is mixed as China's CPI has fallen for the first time in 2 years. Oil has edged higher as well. So the global picture is looking a little tentative at this point in time. The GIFT Nifty, the implied open is indicating a little bit of a negative bias at this point. Let's see whether there's any sort of buying at lower levels. In terms of the FIIs, they net sold over 700 crores in the cash market yesterday. 9 consecutive sessions of selling now. But the DIIs have net bought for 4 consecutive sessions. So they net bought around 537 odd crores in yesterday's trading session. This trend and how it basically corroborates with our market is something that we need to watch quite closely. Now, the markets will be focusing on the macros versus micros as the earnings season is coming to an end. So we have the US CPI data on Thursday for July. We have the RBI policy on Thursday as well. The RBI is likely to hold rates. And we have the India CPI data on Monday as well, which is on the 14th of August. So we have a lot of macros lined up in the next couple of days. The 20-day moving average stands at 19,638.4 for the Nifty. So that'll probably be the next port of call in terms of sustaining at those levels. And in terms of earnings, we have Tata Power, Zee, Bharat Forge, Berger Paints, IRCTC, PI Industries, all of them that will be reporting numbers today. So we will have a lot of focus on the broader markets especially.
All right, Ekta, thanks a lot for taking us through all of those cues. In fact, speaking of earnings, there were a whole bunch that came through post-market close yesterday as well. So Vivek is here to bring us up to speed with how they really looked. Vivek.
Well, good morning. A lot of numbers, a lot of companies declared their results as far as Q1 is concerned. We'll take you through the major ones and how exactly have they panned out in terms of both year-on-year performance as well as some commentary on how exactly they fared against what the street was anticipating. Coal India, very good set of numbers against what consensus was estimating on a year-on-year basis. While revenues were higher by 2.5%, the core EBITDA went down almost 14.5% and margins too slipped over 500 basis points. On the back of that, net profitability was down 10%. Now, the next number that we're looking at is Siemens, a slightly mixed quarter from the company. While the numbers were largely in line with what the street was anticipating, the margins missed by over 100 basis points, and that would be a slightly concerning figure. However, the order wins that the company saw was well in excess of 5,200 crore, and that continues to be a solace. Now, talking about the numbers themselves, revenues higher by 14.5%, core EBITDA up almost 37.5%, margins too coming in stronger compared on a year-on-year basis, 11.6 versus 9.7 last time around, and profitability higher by over 50%. Birla Corporation is a cement company delivering a steady operational performance. Volumes jumped up almost 12.2% on a year-on-year basis. The core EBITDA up almost 15%, and when you're talking about the margins up at coming in at 12.4%. Brigade Enterprises, the lumpy nature of this particular company in terms of earnings deliverance continues. While revenues were down 27%, the core EBITDA was down almost 25% on a year-on-year basis. Margins coming in at 26.7%. Profitability, however, went down almost 56%. Again, this on a year-on-year basis. Aarti Industries, most of the chemical companies are delivering a weak Q1, and Aarti Industries was no exception. While you're talking about the revenues down 12.2%, EBITDA down 28.9%, margins to over 250 basis points lower, and profitability down 48%. And lastly, one company to keep on the radar on the back of news flow, SBI Life, IRDAI has gone ahead and approved the appointment of Amit Jangran as the MD and CEO of the company.
All right, Vivek, that's really a lot for us to track, but thank you for compressing all of that information and bringing it to us. Let's finally move over to Nigel. He's tracking all of the cues from the futures and options space. Hi, Nigel.
Well, morning, Pavitra. Well, let's take a look at the F&O action first. What do the FIs do? They lighten their positions both on the long side as well as on the short side. But the short side, they covered far more. So close to around 7,400 contracts is what they've covered. Though they continue to remain net short, but close to around 53% of their positions on the short side. Now, in the last few days, the FIs, they have been net short, but that's gradually come down. So from around 40,000 net short contracts, that's come down to around 12,000 contracts out. So some part of that short covering from around that 19,300 odd has already played out. Now, on the option side, the 19,600, 19,650 call, between them, they added more than 90 lakh shares, telling you that the 19,650 level, that's going to be the near-term hurdle for the bulls. The Nifty Bank as well, that's going to be important. But before we get to the Nifty Bank, just focus on the Nifty levels. The 20 DMA or the 19,650 mark, as I mentioned, that's a resistance zone. On the downside, though, we are seeing a fair bit of open interest built up at around the 19,500 put, and that has the highest open interest on the put side. So that's why we're seeing some kind of support at around 19,460. The Nifty Bank as well. Well, yesterday it showed some kind of signs that it wanted to go to around the 45,000 odd mark. But I think on the downside, the 50 DMA, around 44,600 odd, that becomes a crucial mark. We saw some writing at around the 45,000 put as well. So that becomes important. But global Q is a little bit muddled. So that's why we start off on the back foot. And let's see how it goes from there. Back to you.
All right, Nigel, thanks a lot for bringing us all of those cues. With that, we do need to get into a short break. But on the other side, we're going to shift focus to the world of commodities and tell you what's going on there. Manisha will be with us in just a bit.